much time do we have? 40 minutes. There's plenty of us, plenty of things to talk. But let's start with introductions. Would love to get to know you. And as you introduce yourself, I'm going to throw you a little curveball. I want you to think about a superpower that you have and then elaborate on that. Ciara, you want to go?
Hi everyone, I'm Ciara Sun, founder and managing partner of C-Square Ventures. We are an investment company in the crypto space, both in venture and liquid token. Prior to founding C-Square Ventures, I lead investment, listing, institutional business, and user growth at Huobi for a few years. Prior to that, I was doing management consulting with BCG in New York, and very happy to be here. And very surprised to see the turnout of Consensus Week is so great, even the market is so shit. And superpower, don't think I have any, maybe cooking. Yeah.
Cooking?
Yeah. You know, it's a superpower
say.
because it grabs people's heart, you know? Yeah. If you can't grab their money, grab their heart.
My superpower is making burgers, so we're completely aligned.
Okay,
good.
Great.
Do you want to go next?
Yeah, thanks so much for having me. Hey everyone, I'm Aditya. I work at the Spartan Group. We're basically a crypto investment and advisory firm. On the advisory side, we're quite active on the M&A space and fundraising advisory. We did that for the Solana Foundation, Bybits, BitDAO, and we've helped sell quite a few companies to other larger firms. I work on the investment side where we manage four funds. Two of them are venture funds, infrastructure, DeFi, gaming. We've been really active for like 5+ years there. And I personally help manage the two liquid funds that we have. One's a directional fund, discretionary, long, short, you know, just like trying to time the market. And the other one's a market neutral fund, deploying into more safer strategies that are yield bearing. As for me personally, I've been in the firm for 5 years. And my superpower, I would say, would be like simplifying complex problems. So, you know, how things work, how like DeFi protocols work, how they mix and mingle with each other, and what could be second order effects of various things. Yeah, that's pretty much my job.
Cool. So you're like a proper fundamentalist trying to get into the stuff and then...
Yeah, get into the weeds and do all the math and stuff, yeah.
Great, awesome. Thank you.
Hi guys, thanks for having me. I'm Arthur, Chief Business Officer at Mercuryo. Mercuryo is a financial institution. We known as a more fintech company, started in 2019. Just developed, I would say, one of the first payment networks in crypto space and been serving exchanges, wallets for a while. I think from last year we started to look into investment side of things because we've been sitting on a pretty much sustainable business, cash revenue generative business from day one. And we've been looking into DeFi space specifically because we've been working with all of those guys for the last 7 years. And started to deploy into pre-seed and seed rounds and focusing on the DeFi, but also payments, programmable payments, and all of the new things around fintech specifically. Our thesis for this year probably is going to be just doubling down on the institutional side of things. I think we have pretty much isolated environment in crypto, and there's an isolated environment in TradFi as well. So there's a new kind of ecosystem evolving where you have financial institutions and crypto-native infrastructure companies like us trying to build products together and offer, I would say, more global coverage and more DeFi primitives to the users. So in this space, we would like to invest, do joint ventures with different VC firms, and it's kind of excited to be here in 2026.
What's your superpower?
Superpower? I used to work at private equity firm Blackstone before Mercuryo, and I think one of the superpowers I accomplished for the 9 months I've been there is to operate in Excel without mouse. So it's kind of a silly thing, but yeah, that was an interesting skill. I never used it after that, and yeah.
Cool, thank you. So I really want to touch on what you just said when we just opened, and you said, well, it's great to see people here. I think there's a lot of movement during Consensus HK. I was here last year. It surprisingly, at least from my conversations, felt less bullish somehow for whatever reason than right now, despite the price correction that we've seen in the last couple of weeks. What are you guys seeing as VCs, as allocators? Is it a good time to raise from LPs? Is it a good time to deploy? Is it chips off the table, on the table, risk on, risk off? Let's start there, just like a overall direction, especially after this week.
I remember back in 2018, New York consensus, when Bitcoin crashed from like almost 20K to like, I don't know, like 6K.
3.
Yeah, 6 and then 3.
3.8.
Yeah. When it's actually down to 3, I think it's November. And then like the conference is pretty empty. But then it was like still 6. It's very active. So maybe it's not the bottom yet.
Oh.
You know?
That's scary.
Well, personally, I think it's not the absolute bottom yet. At least it's not on the right side that we can all in and buy stuff. But we did start buying some. When it's already 60K, it seems like a good opportunities to start building up some positions. But I think for venture, it's always a time to invest. It's always a time to find the new narratives. And now things are cheaper, and team, they have more than enough time on earth to actually build and pivot into the right direction. Valuation more fair, and they have time to actually ship the product rather than just target for a fast listing. So all of that is great. And for venture, it's all about the cycle. The cycle is not just like, another 6 months. So I think for venture, it's still a time to invest, but we've definitely been more selective. Not because the market is bad. I think it's just because not all the tokens will be able to survive. You actually need to have good cash flow, the right direction, big enough market, able to ship products, and find the market fits. And especially now, equity versus token, your token needs to be able to capture real value compared to the equity of the firm. So with all of that, we'd be more selective and definitely investing slower, but I don't think venture is going to be gone. Yeah.
So what I'm hearing is crypto will most likely become a real industry where real metrics matter, like product market fit, revenue, and equity potentially may become useful, right? Because up until now, it's like, who cares? Token go up.
Yeah, I mean, like it's already becoming real. It's already happening. Like Circle's IPO raised like 10.05 billion, and share opened at 37 per share, and then bullish as well. So equity actually makes a lot of sense for us as venture. We're for the first time in this history for crypto, we have another real form of exiting liquidity out there. Yeah.
Got it. Thank you. Anything to add?
I mean, just to continue on Ciara's point and your question about the fundamentals mattering more, we're already starting to see that if you look at the last 2-year trend of valuations and then metrics of projects and how revenues do accrue to like the token in many cases, we're seeing that converge over the last 2 years continuously. So yeah, I think everyone's taking a more conservative stance and sort of turning into like a value investor versus just a meme investor.
Got it. But directionally, where are you? You raising, deploying?
Yeah, on the venture side, we're still quite active actually, and we do intend to raise a new fund sometime soon, and we're still deploying capital from the existing venture pool that we have. Yeah, we're directionally like still very, very long in the ultra long term, 5 to 10 year time horizon. On the liquid side, we are a little bit cautious. Our liquid view does not need to align with our venture view. They're completely different markets due to simply by virtue of the time that you operate in. So yeah, we've been cautious since we kind of detected that the market conditions are a bit choppy and difficult, and it's just better to sort of take a step back. So what we've done is we've concentrated the long side of our book into a few high conviction bets, very few positions, and then we've expanded on the short side of the book much more. So yeah, we're like very, very less net long at the moment.
Got it. Arthur, how are you seeing the market?
Honestly, we're pretty bearish on the crypto as a whole, like isolated ecosystem. As I mentioned, like our kind of view more like a financial infrastructure and the financial institutions. And like I went to New York Stock Exchange 3 weeks ago, and there was like maybe 4 weeks ago was a BitGo IPO basically. And I think like that was a moment when I had this kind of epiphany, like all of the crypto companies, they will eventually would like to be there. They would like to stand by like all of the financial institutions, ring the bell themselves, or like kind of like try to go like 10 to 100. So a lot of crypto companies right now, they went from 0 to 1 pretty quickly, tokens, whatever, like some hypes around the narratives, I don't know, perp dexes, whatever. Like last year it was pretty much a lot of people been doing like different narratives, but I think eventually there's a lot of companies that stuck at this stage of like 1 to 10 and kind of like are struggling to even understand how to go into like 100 from 10. And but those companies, we have like a lot of friends that's been raising funds. They're pretty much funded. They have like Series B, Series like C startups, and they have revenue generative businesses too. But the way they used to operate, they are usually just being served in crypto isolated market where, you know, kind of like a hit the cap, I would say. And right now, like I think a lot of the teams, they never had like crypto as a whole industry is pretty young, so a lot of the teams that never had a banking experience, never had like institutional experience before, so they're hiring people that, you know, have connections at, I don't know, like some government bodies like banks like JP Morgan, BlackRock, and they're trying to get in there. I think a lot of teams like, for example, Ondo Finance, they kind of had the DNA where they started as a team like already had this experience. That's why they're progressing with the tokenization and the narratives like stablecoin, and I think like RWA's tokenization is pretty much aligned with our vision this year because it's easier to understand. Like stablecoin is just helping you to, you know, cut the costs for your cross-border transfers or any other payment businesses, and tokenization just opens new market. Basically, you have new, like I would say, regulatory arbitrage where you can go to the markets, offer your products to, I don't know, countries that you never served before, and just basically make more money. So I guess like right now, it's just easy to go for these use cases. So our bets will be probably around them as well.
Yeah, I think it's great that you touched upon Ondo. I think Ondo has been, you know, absolutely killing it. The announcements were just a week ago during the Ondo conference were also, again, tremendous. And, you know, I think a lot of us here are, or I hope, are kind of bearish tokens, bullish tech. Finally, after 15 years, right? It seems that we're now starting to harness the actual benefits that the technology brings. So exciting stuff. What are you guys seeing in terms of teams that are out there? Do you see teams that are, you know, quite diverse? Do you see teams that are quite capable? Younger teams, older teams? What's out there? What's the flavor like? Maybe that's yeah.
Interesting question, because a lot of teams that are kind of like a crypto native folks, they usually have like, I don't know, developers and DeFi like native people, and there's other teams that started to build the infrastructure, I don't know, like a Fireblocks and Copper, like more advanced guys that had like a TradFi experience before. So like, I think what we see right now, there's a lot of teams are emerging. Some of the founders are stepping down, exiting the companies, and some of the new kind of folks, I don't know, like from private equity or from funds, just trying to balance it up, trying to bring like people that have like, I would say it's hard to wear both hats. Like it's hard to have like both like, you know, TradFi and DeFi native, like a crypto native people in your team. But I think a lot of companies will gonna emerge into something hybrid, like a Frankenstein's. You know, like there's the teams that, for example, Polygon acquired recently CoinMe, which was like the licensed financial institution in the US, and kind of like they were pretty much financial people, like very much traditional banking guys. And Polygon is crypto native team, right? But they have like again, team that they are hiring, for example, from ex-payment companies like Checkout and all those guys that worked before on financial products. So they're like kind of pushing this adoption, and they definitely want to be like in this intersection in the frontier between like a TradFi and crypto native businesses. But yeah, we probably will see like a lot of acquisitions this year. So M&A deals and acquisitions, finally like PE guys stepping in and trying to, you know, like do business together with crypto guys.
Cool, awesome. Yeah, I think we'll talk about regulation for sure, because I want to see if you guys think it's a bit of a moat. But yeah, any opinions on the teams? What are you guys seeing? Anything changing over time? Was it, you know, less? What's your KOL set? What's, you know, how does the SEC strategy looks like, and more like, well, this is the actual thing. Like, how do you see things?
Yeah, so we are seeing a churn in talent in a lot of teams. Like one good sign is, I think the more opportunistic, you know, teams that are just doing it for short-term goals or money are reducing in number. And yeah, a lot of people who actually have a long-term view about the space and what all they can empower with this, with blockchain rails. Yeah, we're seeing that kind of talent stick more, but we've also seen a lot of teams pivot to non-crypto stuff, and then yeah, you're seeing people itself sort of leaving the space. So yeah, it's a healthy mix, but we still feel that there's a really strong pool of talent still within the space. Yeah.
Okay, because it sometimes feels to me that like a lot of people that I knew back in the day have left the space altogether. I mean, we've seen some announcements, right?
Yeah.
I'm sure we'll talk about this, but Ciara, what are you seeing?
We see all kinds of different teams, but one type of team we really like, it's a product expert who's always there to pivot and ship product fast and understand the product market fit, and then plus a like a crypto and token native co-founder, who understands how the token works, understand that the users for a product doesn't necessarily have to be the users of who trades your crypto, and who put out the whole strategies and mapping for different kinds of listings and working with the market makers and exchanges. That's very important, especially when it comes to like original listings in different countries like Korea, regulated exchanges like Coinbase, and global exchanges like Binance. It's all different kinds of strategies. So we definitely want to see the team with founders with mixed backgrounds. And one thing is very important is that the team understands asset management. They understand the risks of managing the capital they raised. Whether you want to keep it in crypto, where you keeping it, the custodian part of it. Are you using the capital you raised to earn yields? So that risk management mindset is very important as well.
Understood. I mean, obviously everybody is, I would hope, up to date with all the regulatory developments that we've had over the past months, years even. So it seems that, if we look at a token team, right, and they're about to list their tokens, I think MiCA compliance is important if you want to access European markets. It seems that now if you're looking to tap the US market, you need to also be Genius compliant, right? There's this talk about, I think it's 8 or 10,000 wallets, so sufficiently decentralized is something that, how do you see this? Is this important for you when you're investing? When you go, well, the team is great, the token strategy seems to be on point, they're going with their TGE, whatever that is happening, do they have their regs in order? Is that something that's relevant for you, or it's becoming more relevant? How do you see that?
Well, definitely, especially with my background, I was managing listing at Huobi, and we got cracked down by China twice.
Okay.
And they're constantly going for founders who's launching a token in China. So it's very important. And we have a decent amount of portfolio companies. Founders are Chinese citizens. So in order for us to invest, they need to, be very determined to move outside of China. They can't be based there. The team needs to be, they can be in Hong Kong, they can be in Singapore, but they can't be in China. That's the single biggest risk factor, right? So I think for other countries, similar kind of regulations apply, especially, in Korea, they're very serious about the regulations there as well. Whether you like how you can trade, how to provide liquidities for the tokens. I think that's I think that's probably the most important factor for a token to survive, right?
Yeah. Got it. Thank you for sharing. Folks, what do you think?
Yeah, for us also, it's like certainly important. It's a big plus to have in the project, but it's not a deal breaker. And over the course of the project's life cycle, we can actually advise them and help them on their journey to be compliant with whichever jurisdiction. So yeah, while it is important and you want the team to be on top of things, it's not a deal breaker. Yeah.
Got it.
Compliance. No, I think in the US specifically, Clarity and Genius Act defines like those two areas, like stable coins, for example, with the Genius Act, and the Clarity Act just gives a lot of green light, I guess, for tokenized assets and the overall developments in this space. So, for example, New York Stock Exchange just announced that they will develop the tokenized platform, which will be acting as a standalone business. So they have like the main one, which is like 24/5, and funding with a wire, like just the banking infrastructure. And there's a new one, which is like a Web3 subsidiary, which is the 24/7 and stablecoin funding. So like that came just recently together with the Clarity Act and the Genius Act, and I think that's the path for many companies that work in this space. I mean, you're at AMINA Bank. You guys are also advancing this from your perspective as well. So I think a lot of banks are going to be more open for those developments because of the regulation. And finally, there's like not many, I guess, culture vulture left, and a lot of companies on the crypto side ready to provide this infrastructure to banks. And again, there are the teams that kind of like hybrid, they understand how to work with institutions. So I guess like regulation is pretty good in this sense in the US specifically. And I guess that's the only way probably to operate when you have like your main business up and running, and you don't want to replace everything and all of these licenses, all of these, the regulational things that you've been working with for the last, I don't know, 20, 30 years. Some of these banks, like for 100 years, they wouldn't be able to just, get rid of this from from day one. And the way they started, for example, like I would say better example will be like modern finance, like Revolut and Robinhood. So they're doing this like as a Web3 subsidiary. They're doing this as standalone kind of like a business where they're probably going to have the same user because it's the same brand, but like offer those users like 24/7 trading or like new markets, new access to, for example, equities that Robinhood did in last year with Arbitrum for European citizens, because there was again clarity on the MiCA compliance side of things. So yeah, we're super excited for that. We're happy to work with those guys. We're actually contributing to those developments as well from our side. We're working with Revolut and Robinhood on their new like products, Web3 ones. But yeah, I guess like there's just a foundational layer, what we do with the payments, with the regulation, with the blockchain infrastructure, with the stablecoin infrastructure, and the wallet infrastructure. There's a lot of new narratives from DeFi that they can bring on board. So yeah, excited to see how it happens.
Good. Thanks. Well, we were just, before entering the stage, we were talking about the M&A season. So keen to learn more what you guys are seeing. I think maybe, Arthur, let's stay with you, because the way that I understand the company is you say you're backing kind of 0 to 1 companies, then 1 to 10 or 1 to 100, and then you're also looking at the M&A stuff. What are you seeing in the market when it comes to M&A? Because we've seen some hairy acquisitions, i.e. Axelar. The token holders were left a bit, with nothing, let's put it this way. Not necessarily the best way to acquire a company, and then you go like, well, we're actually acquiring the tech. All right, but there's that liability that you have, right, which is to the token holders. How are you seeing things happening in the M&A phase?
Yeah, I think from our perspective, as I said, we're looking into kind of like an intersection between TradFi and crypto companies. So like those teams that have experience building infrastructure that will be institutional ready, institutional grade, that the banks will be able to accept that. Those companies will definitely merge with more serious financial institutions and like regulated entities as well. So probably saw like this kind of merchant acquisition with Rockaway X and Soulmates last December. So like things like that are going to establish, I guess, a more serious foundation for TradFi access. And some niches, like for example, guys are specializing in trading. They're setting up like a fiber network all around the world, and they will be able to expand this infrastructure to larger financial institutions and to existing businesses. So like in crypto, I guess trading is the main use case right now. Like it's 70% of the volumes coming from futures, from perps. And in TradFi, it's also the biggest actually use case and the biggest like notional volume coming in from Forex, for example. And Forex has like 10 trillion like dollars volume per day. So I guess like teams that are gonna be able to establish like partnerships with the more serious players that can have that can give them access and credibility, and also expertise from the team perspective, how to pitch those guys, how to like build products for them, how to work together. Those teams will succeed in the future, and we'll be try to ourselves, like we'll try to join those races and kind of like act in between, like as a connecting tissue within like DeFi companies and like TradFi, financial institutions, modern finance, as a connecting tissue, and like probably we'll be doing like a joint venture with those teams. Help with our distribution network as well, but I guess more from the expertise working with the financial institutions, because we are a financial institution.
Got it. Thank you. What are you seeing on the M&A front?
Yeah, pretty much echo what Arthur has said. So we've seen a lot of teams that have crypto native expertise but not TradFi, and then vice versa as well. So yeah, just to sort of bridge that gap, we're seeing companies acquire others to get that acquiring that expertise basically. Uh, yeah, so we've seen a few Web2 payment rail operators acquire Web3 companies, exchanges doing their own set of acquisitions, crypto exchanges basically. So yeah, that's the overall activity we've seen.
But I think as a altcoin, let's not swear on the stage, as an altcoin holder, I think everybody wanted the M&A season to come in and potentially TradFi acquiring both teams and tokens, and then potentially taking them off the market, buyout, I don't know, something, right? Again, it's a liability, it's an outstanding liability. But do you see that whenever those acquisitions are going to happen, as you said correctly, it's an expertise play. So you do want to have that team. What then the acquirer should do with the token?
Yeah, we've seen some of these mergers within token teams, like the artificial superintelligence merger of Fed token, right, which has now been plagued with certain internal political issues, where there was misalignment regarding what the token holders should get. So for every team, there should be a clear path to make sure all the value is directed to either entity, but with full transparency, preferably the token. And then, yeah, there should be alignment with token holders, the team itself, and the acquiring entity. We are not yet fully seeing that. There is a clear incentive misalignment in a lot of cases. But yeah, we are also working with teams towards that to make sure take that forward. Yeah.
Got it. What are you seeing?
Just another aspect, we talked about this off stage already. The first 3 quarters last year, we saw hundreds of DAT companies that launched. And apparently we don't need that many. And
we'll talk about that as well, the L1, L2 saga.
Yeah, and then there's uncertainty of like governance of those DAT companies. How do you target the buy? Who can make those decisions? And how do you really sell? Was all of that not really clear? Apparently the situation that's happening now was going to happen. And now there are even funds raising money to buy distressed assets of those DAT companies, and that can potentially be opportunities for funds, in the M&A sectors. Yeah.
Got it. I think maybe jumping from the DAT side, we've all seen what Vitalik has been posting in terms of the L2s and how it needs to evolve, and that sparked. I'm actually interlinking the two events. So that sparked a whole debate between the L2 founders, and then a few VC folks started to exit. So I feel like there's something there between that, within the weeds of that debate. So how are you seeing? Because if you look back a year and a half ago, 2 years ago, the L2s, L3s, infra, scaling, segregating liquidity, that was all the hype. Right, and obviously, optimism is well represented here as well. So a lot of different chains built with the optimistic stack. Yet we get this big signal where, well, L2s. I'm interpreting it as L2s have to change a tiny little bit. With all your portfolio invested assets, how are you seeing this development? Do we want more L2s, more L3s? Do we go back to L1? Do we change? What does that look like?
Yeah, so for quite a few years, I think we've seen, I think this is a function of too much underutilized infrastructure. And we've seen that for the last few years, where there just aren't enough useful applications making use of all of that infra which exists. And yeah, after Vitalik's tweet and everything, it sparked this whole debate of how much real value so much infrastructure is bringing to Ethereum, which is itself scaled. Like the L1 itself is on a pretty decent path to scaling on its own. Yeah, so from our perspective, we kind of monitor all of these infrastructure projects, how much utilization they do have, and then try to assign sort of a fair valuation to them, which for the last couple of years is way, way above what it probably should be based on the usage. So it's a fairly easy, directional move there. Yeah.
Got it. Any additions, Arthur? What do you think?
I guess we work with all of those guys. We've been supporting their ecosystems for the last years, and obviously, like they had like main priority right now to go and pitch institutions and banks to, I don't know, like if you have an L1, you want to probably bank build on your infrastructure. So like Solana Foundation, like Ethereum Foundation, they're doing that right now actively. I think I would struggle to say our take, like, is it like investable material or not? But like, I guess what we see right now is like guys like Stripe and Tempo, for example, would be, I guess, a great intersection, like paradigm with the crypto native folks that wrote the Ethereum contract, and also Stripe, which is one of the largest tech companies in the world with a reach to all of the banks, kind of like a mafia as well, because all of those guys, they used to work like neobanks and I don't know, financial institutions. They were founded by Stripe, or they used to work there. So like, I guess it's a very great combination of this expertise, like between like crypto native and the financial company. And the idea that they come up with recently, like all of those banks, all of the guys, they probably want to have like a 1 or 2 vendors, not 10 and 15, like you mentioned, like all of these guys, like so many different narratives. Tempo is trying to acquire basically this market and go with the holistic like all stack, where they offer blockchain infrastructure, they offer wallet infrastructure and stablecoin issuing platform and native payments. So we contribute to the native payments part of their business, but I guess like the easiest part for the bank is just to choose one provider and go with them. The struggle with all of the other banks, I guess, with more bigger ones like this JP Morgan, Morgan Stanley, those guys, they very traditional and very conservative. Like all of the guys that came up with their blockchains like last year or like even 5 years ago, they're struggling because like the first thing that those guys saw in the decentralized finance space, I don't know, the first smart contract developments they saw, that was Ethereum. So like for them, it will be really hard to pitch anything that's different from Ethereum or not aligned with Ethereum, mindset. Yeah, I guess that's kind of our view on those things. We would happy to support those guys in their journey, pitch banks, help them to develop more holistic approach for this. And if there's someone who is building like a new infrastructure, I guess they will need to pick not the winner in terms of the glory and in terms of the, I don't know, brand awareness or amount of money that they raised, but someone who's got like kind of experience and working with institutions for the last at least 10 years. And just building infrastructure that's aligned with those institutions' infrastructure as well.
Got it. I think we maybe have time for one last question, and I would love to dig deeper into the following. So I'm sure everybody's on CT here. Everybody's seen the latest departures from the VC space. What do you think drives that? Do you think people are just genuinely bored and had enough with the space and they're moving on? Are they frustrated? Are there not that many opportunity for them to get down and dirty? Is it intellectually not stimulating enough? What are you seeing? Maybe let's start with you, Ciara.
Are people leaving VCs, right?
Yeah. There's a few notable exoduses.
Right. I think it's definitely harder now to do VC investments in crypto. Like all the altcoins are surviving. Are not surviving. I think when Trump launched a token, it definitely sucks up all the liquidities in the altcoin space. And what if all the big companies like Meta and Google, they're launching their token as well? And then what happens to Near, to Solana, to Avalanche, all those ones? It's gonna be really hard for them to survive. And besides, I think now, as the beginning of the panel, I was saying that I think it's probably gonna go down more for Bitcoin, maybe 50, maybe under. And you have to think about opportunity cost, whether you want to invest in something that have a very long time of actually deploy and getting listed with all of the cliff and vesting exchanges are requiring them to do, compared to you can just buy the biggest asset in this industry and probably have a bigger chance of having a really good return in the next year or so. can just go double in a year. Like, you have to think about opportunity cost. So I think not really leaving the space, but being able to pivot, maybe do more liquid, or just buy, some team that you really like, already have existing users and cash flow. You can just talk to the team and maybe buy discount tokens from them and support them from there. Still from a venture kind of perspective, but definitely lower risks. So I understand the decisions.
So basically, what you're saying is they just want to go to back to Bitcoin effectively.
Back to Bitcoin, or altcoin, for sure there's gonna be really good ones to survive, but I think for really new tokens to be able to launch at this point of the market, you have to see them having the ability to raise the next 2 rounds, really big amounts, in order to survive. You have to survive the next bear market, maybe 1.5 bear markets, to be able to really make it. So that's gonna be hard.
Yeah. Fair enough. What are you thinking? What are your thoughts?
I think a lot of people have been a little bit discouraged after many of the narratives didn't work out. We saw SocialFi, NFTs, gaming, and just because there are such few apps, from which you can capture value, there's not a lot of value to capture for the infrastructure. So even the infrastructure investors got kind of demotivated and decided to pivot. I think that's been a major factor. So everyone's accepted that the best use case for blockchain is financial rails for financial products and RWAs and stable coins and everything. I think that's a major factor. The other thing is we have been getting more regulatory clarity over the past year, like since the election, US election, and that's good. We're definitely moving forward there. But the regulation also needs to be in a direction that promotes healthier speculation, not just finding the next 100x or 1000x or going out chasing a meme coin or vaporware narrative or something. So I think
I hope that's gone. I really hope that's gone.
Yeah. So do we. Like a lot of these ghost chain L1s that are at egregious valuations, they probably should have some sort of tighter regulation, and we should go more towards stuff that's creating value. I think these two are the major factors which are causing the pivot for a lot of people.
Yeah, and people basically, so to sum up, it's a bit of going back to fundamentals and a tiny little bit of boredom.
Yeah, just simple, healthy businesses, cash flows. Yeah, just go after.
Fair enough. Cool. So it's a degen washout, basically, that also escalates all the way up
exactly
to VCs. Fair enough. What are your thoughts?
No, I think sentiment is pretty bad on crypto Twitter specifically. But someone said crypto Twitter is always wrong. I don't remember who said that, but it was kind of like this statement. And obviously a lot of people, like retail investors, like crypto native investors, they bad down for the last 2-3 years, and especially the last one. But I guess there's still excitement. I can see new narratives coming, for example, like RWAs. So if the crypto native altcoins kind of not performing and all down 90% from the TG price, there's still commodity markets or equities market that will be appealing for the users, for the crypto users. And I guess it might be really interesting transition of those guys that have been trading on the crypto native platforms. They never had equities. They never traded on the banks. And they're down badly, or they exited and they don't know what to do now. So they will be all transitioning to also crypto native platforms. For example, Lighter. And Lighter has as a perp dex all of these derivatives use cases, and I believe perps, in my opinion, just a much way better derivative product than any existing ones. So you can trade the same forex commodities equities, and those are net new products for crypto native users that are looking for something new on crypto Twitter, and they're just easier to understand, directional than existing options or futures. So a lot of excitement around that, and I guess players that building infrastructure to accommodate those users from crypto Twitter, they will win this market again.
Yeah, fair enough. All right, we got just 30 seconds left, so let's just wrap up very quickly. You're here in 2026. You meet a team. They're good. You like them, but you're just well, I just want you to do this one thing. So by the time we meet next year, I'm going to write a check. What is that one thing? What would be like if you could talk to your ultimate team right now that you are looking to invest in the near future, within a year? What that one skill that they would have to build?
One skill? Passions. Underappreciated in these days.
Got it?
Just grit and maybe product market fit. Yeah.
Grit and product market fit. So two things. Great.
Cash flow.
Cash flow. Yes, finally. Not token go up. Cash flow.
Flow.
Good, good. All right, well, there you have it, folks. We're actually right on time. Thank you so much. What an amazing panel we've had. Please give a round of applause to our phenomenal VCs. Thank you so much, everybody.